Every trader dreams of winning. But very few understand the danger that comes after victory. Because sometimes, it's not your losses that destroy you. It's your wins. When you win trade after trade, your confidence grows. But deep inside that confidence, something toxic begins to form. A silent killer. It whispers, "You figured it out." It makes you believe you're in control. And the moment you believe that, you're already losing. This is the story of overconfidence, the psychological trap that ends more trading careers than any market crash ever will. In trading, success feels like proof. Proof that you finally understand the market. Proof that you've evolved beyond your past mistakes. Proof that consistency is just around the corner. But here's the uncomfortable truth. Every winning streak carries a hidden danger. It changes how you think, how you see the market, and how you behave. Without realizing it, you begin trading a new system, not your strategy, but your ego. The same discipline that gave you success begins to fade. Your patience shortens. Your risk tolerance expands. You stop seeing danger because everything seems to work. That's not growth. That's illusion. Section 1: The psychology behind the trap. The human brain is wired for reward. When you win, dopamine floods your system. It's the same chemical responsible for addiction, for gambling, for the need to chase more. Your brain starts craving that feeling again. You're not trading for profit anymore, you're trading to feel that rush. You start thinking, "I'm in rhythm with the market." You forget that what you're really in rhythm with is your own emotion. Overconfidence hides inside progress. It makes you believe that because you won, you understand. But winning doesn't always mean you were right, it means you were rewarded. Sometimes by skill. Sometimes by luck. The problem is, your brain doesn't know the difference. Section 2: How traders fall into it. It starts small. You win 3 trades in a row. Your confidence rises. You stop checking your risk-reward ratio. You start entering earlier. You convince yourself you can feel where price will go. Then, you increase lot size. You think it's logical, "I'm winning, so why not compound faster?" But in reality, you're not compounding your skill. You're compounding your emotion. And when the next trade hits stop loss, it doesn't just hurt your balance, it attacks your identity. You begin to question why you lost. So you take another trade, this time not from analysis, but from pride. That's when the market takes back everything it gave you. Section 3: The emotional illusion of control. Overconfidence makes you forget what kind of game you're in. You start believing your effort controls the result. But trading isn't like studying or working harder at a job. You can analyze perfectly and still lose. You can make a mistake and still win. That's why trading punishes ego. Because it's a game of probability, not perfection. The more you try to control it, the faster you lose control. The illusion of control is the most dangerous mindset a trader can have. It makes you believe that the market listens to you. It doesn't. It listens to no one. Every chart you open is neutral. It doesn't remember your last win. It doesn't care how confident you feel. It simply reacts to liquidity, not emotion. Section 4: The breaking point. Eventually, every overconfident trader faces the same moment. The streak ends. A trade goes against them. They hold it, believing it will reverse. It doesn't. Then another loss. And another. The disbelief sets in. How can this happen? I was doing everything right. But you weren't. You changed, quietly, subtly, without noticing. Your risk increased. Your patience decreased. Your belief in probability was replaced by pride. You didn't lose because your system stopped working. You lost because you stopped following it. Section 5: The recovery starts with humility. The first step to defeating overconfidence isn't fear. It's humility. Humility reminds you that success in trading is temporary. No matter how strong your system is, the market will test your discipline. Humility keeps you curious instead of certain. Disciplined instead of emotional. Focused instead of proud. True mastery isn't about feeling unstoppable. It's about feeling prepared. You don't need to control the market, only your response to it. Part 2. Breaking the Cycle of Overconfidence. Section 6. Recognizing the Shift. Overconfidence rarely announces itself. It arrives quietly. It hides behind your recent wins and the comfort of momentum. You do not wake up one morning thinking, "I am overconfident." You only realize it after you break a rule. The first sign is subtle. You stop double-checking your setup. You skip journaling for the day. You open a trade earlier than planned. And when it wins, you tell yourself you were right to trust your instinct. But what you really trusted was emotion, not evidence. The second sign is impatience. You start feeling that waiting is a waste of time. You believe that because you can read the market faster, you deserve faster profits. But speed has nothing to do with mastery. Every professional trader knows that control of time equals control of emotion. The third sign is pride in prediction. You stop reacting to what you see and begin trying to predict what will happen. You feel smarter than the market. You forget that the market exists to humble those who think that way. Section 7. The Behavioral Pattern. When you study your past trades, you will see the pattern clearly. The losses after winning streaks are rarely random. They follow the same rhythm. Win. 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 Increase size. Enter faster. Skip confirmation. Lose. Lose again. Doubt everything. This cycle repeats until the trader either quits or learns the lesson. And the lesson is simple. The goal is not to win every time. The goal is to trade the same way every time. Consistency is not measured by results. It is measured by behavior. Section 8. Rebuilding discipline after a streak. When the streak ends and the drawdown begins, do not rush to fix it. Do not chase back what was lost. Pause. Detach. Analyze. Start by reviewing your journal. Not the numbers, the decisions. Ask yourself, when did my behavior start changing? When did I stop following my rules? At what moment did I begin trading for emotion instead of process? The answers will feel uncomfortable. But discomfort is the start of correction. Once you identify the shift, reset your system. Reduce your lot size. Return to your strictest plan. If you risked 1% before, risk half. If you took 5 trades per week, take 2. The goal is not to recover profit. The goal is to rebuild control. You are not proving you can win. You are proving you can stay disciplined after losing. That is the real skill. Section 9. The Mental Reset Technique. Professional traders use a simple reset method after every winning streak. Step 1. Take a break for one trading session. Let your mind return to neutral. Step 2. Review your last 5 trades. If they all made money, assume at least one was luck. Find which one. Step 3. Before your next trade, repeat this line to yourself. I am not owed another win. That sentence removes entitlement. It returns your focus to execution instead of outcome. And step 4. After your next winning day, end the session early. Stop trading while you are ahead. Train your brain to associate success with control, not excess. This is how professionals turn psychology into routine. Section 10. The Strength of Humility. There is a powerful quote among elite traders. The market rewards humility and punishes certainty. Humility is not weakness. It is awareness. It means you respect the uncertainty of the game you play. It means you know that every edge has limits, every trend has an end, and every strategy will fail if the trader becomes proud. Humility keeps you analytical after wins. It reminds you that your job is not to predict, but to prepare. Not to control, but to respond. A humble trader can lose without anger and win without arrogance. And that is what makes them unstoppable. Final reflection. Overconfidence is not a one-time enemy. It waits at every level of success. The more skilled you become, the more dangerous it becomes. Each time you evolve, it returns in a new form. When you start winning consistently, it whispers that you can increase risk. When you get funded, it tells you that you are now above mistakes. When you go profitable for months, it makes you believe you have mastered the market. But no one masters the market. You only master yourself. The greatest traders are not fearless. They are self-aware. They can sense the shift in their own behavior before the damage appears. They know that control is internal, not external. And they never forget that one day of arrogance can erase months of discipline. So remember this. Winning is not the goal. Consistency is. And consistency is not built by chasing profit, but by protecting discipline. The moment you feel unstoppable, slow down. The moment you feel too confident, step back. Because in trading, the danger does not appear when you are losing. It appears when you start believing you cannot lose. That is the silent killer. And only awareness can stop it. If this message helped you understand yourself better as a trader, subscribe for more deep trading psychology lessons. Every week, we uncover the hidden emotions behind your trades and the mindset that separates discipline from destruction. Stay focused, stay humble, and keep trading with purpose.